Bitcoin killer whale games. That's the theme for today, guys. I was thinking about what to do, and I tell you what, really had a couple of different ideas in mind. And since we've been seeing liquidity moving so aggressively in the order book, and including a number of spoofs in both directions, and because we're headed into the weekend, which is typically a time that we see some whale gamification, I figured this would be a good central theme for today's Bit Break. So that's what we're going to do. Hey, if you're just joining us, hey, I'm Keith Allen, and glad to have you with us. Or me, I should say. I don't know why I speak in those terms, but this is going to be an interesting one, maybe a little bit educational for you, right? Because if you're not familiar with the order book, or studying order book liquidity movement, this is going to help you out here. So, it doesn't really matter if you consider this manipulation or gamification or even fair play. If you can identify it, you have to, well, first of all, the net effect of what's happening when liquidity moves like this is typically the same either way, right? And so if you can spot these things happening, you have to make the decision of whether you're going to sit it out, which is obviously the safest move, or if you're going to attempt to trade and play along with it. And if you think that you're going to beat these whales at their game, then you better have a bigger stack than they do. I personally do not, but I think I have something better. And that something is a tool that I have been using. We've actually developed, in full disclosure, quite some time ago. And it gives me an edge, not just in my everyday trading, but it really gives me an edge when this kind of behavior is going on. Because if you can identify it, if you study it long enough and you identify it, then you can swim along with these whales and play the game. But really important that you, of course, as always, are utilizing good risk management practices, and that you don't get too greedy, because you really, if you're going to do this, especially in short-term trading like this, you want to get out. You want to close those positions before the whales move against you and either negate your profits or worse, put you in the red or liquidate you even worse. So we don't want to see that happen. So with that, I'm going to go straight to fire charts, which is for those who are not familiar, this is a heat map of the order book combined with a CVD chart. CVD would be order flow. And so utilizing these two data sets together could be very advantageous, because not only can we see where liquidity is moving and see where that resistance and support are, but we can also see when whales are buying and selling in mass, market orders, I should say. So here's the order book up top. Here is the CVD at the bottom, and we have this binned CVD here, which has each order class kind of binned by order size, right? So we have blue would be true CVD, is the sum of all orders here. I'm going to click them all out here just so I can introduce each one at a time, so you know what we're doing. This, I guess, is going to, we're going to talk a little bit about the broader spectrum of price action, but this is going to be a bit of a tutorial to help you guys understand how to use fire charts. So let's go to the yellow, which is the smallest order class, $100 to $1,000 order sizes. And when we first started this good 4 years ago, it was pretty evident that yellow was retail. And what's important to understand is that whales can disguise themselves as retail, and retail cannot disguise themselves as whales because they don't have the means to do so. In recent years, especially the last year or two, we have seen whales using these smaller order classes for a number of reasons. Sometimes it is to disguise what they're doing. Sometimes it is to TWAP, that's time-weighted average price, buying or selling, and to do so at scale. And other times it's simply because there's not enough liquidity in the books to make big whale size orders. Green would be $1,000 to $10,000 orders. And you can see through the past week, they've both been net selling. Red, I call this order class sharks. And this is an important one to know because especially since the beginning of the year, this order class has been very aggressive, buying mostly through the beginning from Christmas on to where do they peak here? They peaked in mid-March. This was really, in my opinion, very, very closely related to the ETF hype. I can't tell you whether or not this was actually in one of the entities selling ETFs, but it's certainly something that seemed to be on that narrative. Things got toppy for them in mid March, as I said, and they've now sold about 20% of what they bought. This is a normalized view here on the CVD. We can convert this to absolute and see exactly what they've done in cash value. So in the from Christmas on, okay, so this started heavily. Their buying started heavily, literally on Christmas Day, Christmas Eve, something like that. They were down $470 million, and since then had bought 4 billion. So we'll call that 4.5 billion in net buying over that period of really just 3 months, not even 3 months. Since then, they have sold a bit from that 4.2 billion. They have sold about $1 billion, almost $1 billion worth, and as you can see, just started buying back here in the past few days. So that's notable. Let's move on to the other classes. Purple here, purple whales. Really, and let me go back to normalize so you can see their view better. The purple whales really have been the most dominant class for Bitcoin price action since I've started, since we've been doing this. We've been looking at this again for over 4 years, and purple has really had the most influence over Bitcoin price movement. Now you could say, well, what about those brown mega whales? Those are $1 million to $10 million orders, and obviously they have a tendency to have some influence. The biggest difference is just the amount of volume based on the frequency that they trade, which is quite low in comparison. The brown mega whales just have not had the same impact as the purple whales have. Now, when they work in conjunction, obviously those make big moves. But just to give things some perspective, give you some perspective here, in this same period of time, now we're looking since, let's just call it, to make it easy, let's just look at the last 6 months. Those red sharks are net positive 3.3 billion. Remember, we started with a deficit down here of almost $500 million, right? So purple has only bought 353 million net positive, and brown only 184 million. So again, really the impact of what purple has done and what red has done here in the past year since December has been really new for us. So watching these things very closely pretty much every day at this point. So noteworthy, of course, that red sometimes will do some bidding, and they're obviously dealing in institutional size, mega whale size volume, right? But they're doing it in smaller order sizes, again, because of the potential for slippage when you have thin order, when the order book is thin, right? So where we sit right now, and I preface this by talking about what to me is, you could call it choreographed moves, you could call it manipulation, you could call it liquidity herding, you can call it whatever you want. Let me show you what I'm talking about here. And if you have questions through this stream, by the way, guys, you can chime in the chat, and I will do my best to address those. So I want to go to the weekly view here for a second. And you can see here a series of movements in the liquidity here, and I'm going to apply a little bit of filtering so that we can see it better. You can see on both sides of price where we've had liquidity move in and out, move up and down, and how price has reacted to that. Okay, so in this example up here, right, we saw a sell wall come in outside of the active price range, right, outside of the active trading range. But the net effect of that is it pushed price down, right, and as it was moving down, we saw more come on top of that, right? We saw another, in this instance, almost 28 million come into place. And again, it was well insulated. Like they had no intention of getting filled here, but they just applied more pressure. But it wasn't enough, right? Price kept moving up, right? So they added more and more, and eventually price came through. But this spoofed, right? It pulled. They had no intention of getting filled here. They pulled because they were getting challenged here, and they pulled that. Same thing up here, right? We saw this sell wall here of 21 million come in at this 67.75 range, 67,750 range, and again, um, it was challenged but pulled. And then yesterday, right, things started breaking down, and we saw this double stack buy wall come in at the 63.5 level, uh, and this actually served as a bounce. It never got hit. It was pulled. And now there's a difference when liquidity gets pulled and when liquidity gets moved. And here's an example of that. You see this this little sell wall up here. If we look at it tip to tail, we can see that it disappeared here, but it actually moved down. Right. So when you see this happen, that has a bearish effect. It's pushing price down, and lo and behold, that's exactly what has happened. Right now, did they put this here because they want to get filled here, or did they put this here because they want to get filled down here? Um, again, tip to tail movements here. This one moved up here. And so when we see this movement, price tends to move away. You go, well, isn't price attracted to liquidity? Well, it is to a degree, and then it gets repelled if there's enough there to influence the market where they don't think that they're going to get filled here. So now we have more liquidity coming into the 60K range, which is a good thing. And just to give some perspective on where price movement is, and relative to what we've seen here this week and through some of the other technical indicators, we had this incident, or I call it an incident, right? We have a structure in the chart, right? It is a falling wedge, which is historically a bullish structure. We had a breakout here, but we fell back in a couple of times, and so these lines are subjective to where you draw your line. So I take these wicks with a grain of salt, right? I think that I did actually expect things to move down a little bit further. I did expect a retest here, and it didn't happen. And it didn't happen because we got this liquidity that came in here that stopped it in its tracks, and things went the other way. So does that mean that we won't get that retest down there? Well, no, nothing's ruled out at this point, right? Doesn't mean it has to happen today. Things don't have to happen immediately, but we have some key levels here that are pretty important. One being this green 21-day moving average. You can see we just had a death cross with the 100-day moving average. That's not necessarily a good sign. Yes, it's a lagging indicator. And yesterday, if you want to look at yesterday's stream, we talked about how price tends to initially bump up after these crosses, but then oftentimes can go back to a consolidation period and then grind down further before recovering from where it was. Now we do have this overriding, I would say, bullish macro narrative post halving, ETF influence, et cetera, et cetera. And I'll just take a brief moment to look at the ETFs since I mentioned it. Yesterday we had another net positive day for the ETFs, and interestingly, BlackRock bought almost 94 million after 3 days of dormancy. So that should tell us something, right? Maybe they don't think things. Yesterday I said, well, maybe they haven't been buying because they think prices are going to go lower. Well, yesterday they bought because we had some decent economic news over the past couple of days in terms of what the economic reports were coming out as. Still some mixed data on that, but nonetheless, it was definitely a net positive day for Bitcoin ETFs yesterday, and there seems to be more demand building for that around the world. Hong Kong on board with ETFs, other sovereignties talking about doing the same thing in Dubai and other parts of Asia. So it's reasonable to expect that ETF demand will continue, but these guys are now trading alongside the market as opposed to just aping in with crazy demand and pumping things up like they did when in February, late January and February up to mid-March. So things are settling down. That market is maturing, in my opinion. So back to what's happening here with the order book liquidity, right? So like I said at the beginning, you have a choice. You can sit this out if you think it's manipulative, and And doing so is a strategy and a position, right? Sitting on hands is a strategy and out is a position. But if you do want to trade it, the you can follow the liquidity. You can follow what these whales are doing, right? Maybe you can't beat them, but you can certainly swim in their wake if you're paying attention to what they're doing and you study the liquidity movement as much as I have. Well, you probably don't have to do it as much as I have, but I've been doing it every day for years. So that obviously is helpful here. But when you see this happen, when you see liquidity stair stepping in one direction or the other, it's reasonable to expect price to move with it, right? This is what I call liquidity herding, right? They're herding the liquidity up like cattle, herding them up here, herding bids up, and they try to um, attract others into the range, and that would help fuel an organic move. But if they don't get anybody else coming in, then and they just keep pushing up like this, then they're just pushing up to get orders filled on the other side, right? And so then they may pull, or then they may fill, because if they if they get filled here, they could conceivably keep this in place and make some money, right? Because they're dealing with millions of dollars here. So you get a nice move for a couple percent. That's decent money for a Friday afternoon, or whatever time of day it is, wherever you're living. In terms of how far we could go up here, you see that some of this liquidity from above has come down to put some more pressure here on 70K. We have this 69K level, which is obviously very, very significant. And let's go back to the candle chart to talk about that, right? This was the all-time high. The 2021 top was the all-time high for literally years. We flirted with it above and below the line here since we first touched it in early March, and then obviously broke down from there, tried it again, broke down from there, tried it again, and now we found ourselves in this falling wedge. So if this falling wedge is indeed valid, how high can we go? Well, one methodology to try and estimate that is to take a measured move from the top of the range to the bottom of the range, and then take that to the breakout position, which we'll call it here, and that takes us right to 73K range. This may not be perfect, but 73K range, just below where the all-time high is. Is that a reasonable expectation? Sure, that could happen. What's it going to take to get there? A hell of a lot, and we'll get into that in a second. In terms of what could happen to the downside, yes, this can break down. We do have, we talked about this 21-day moving average and the death cross, whatever. Something unique to this is that not only did we come through these two moving averages here in one move, we came through a third one. We came through the 50-day moving average. And now that is trying to establish itself as a resistance support flip, an RS flip, if you will. And yesterday we attempted, and it wicked down. And that wick down to me was a sign of weakness. But then, so I did expect it to come down here, but it didn't. And why didn't it? Well, it didn't because of this liquidity that moved into place after the fact. And so this pretty much established support here, but it wasn't true support. Because why? Because it disappeared. And so now, is it reasonable to expect it to go down? Yes, it is. But sometimes, the market defies logic and expectations are not met. And a perfect example of that is what is happening, or what has happened here throughout the year, right? We cleared all these levels, and typically you would get a retest of support when you have major consolidation like that and breakouts. You would get a retest of support, but it didn't happen. We didn't get a retest of this RS flip here at the 45K level. We didn't get a retest. Look, no revisits down here to this 50 to 52K level, and so that means we don't have to. Should we go revisit this and retest it? We should, or at least but we haven't, and it doesn't mean that we have to. And so these targets are still legit for me, but in terms of what the order book is showing us, how legit are they, or how much sentiment is there? Well, that is also changing here over time, right? Let's zoom out to a wider range here, and you can see that some of the sentiment for these lower levels is starting to fade a little bit, right? We had, at one point, we had a great deal. We had a high volume of concentrated bid liquidity with good depth to it, all the way down to 50K. And as you can see, some of that has faded considerably, as has some of the resistance overhead. Right, it was heavier here and started to thin out a little bit. Let me build some more contrast in this chart too, and maybe that helps us identify these areas that have changed quite a bit. Right, so by filtering out the low volume, we can see really what is the deepest concentrations in the most important parts of the chart to focus on, the most important levels, if you will, and see how much we had concentrated down here to get this bounce, and how much we've had up here, which has faded out obviously considerably. So it's not that it was just pulled; it didn't just disappear. Much of it was lowered into the range. Look at this. We talk about stair stepping in both directions, right? When you see moves like this happening, this is what I call liquidity herding. It was pushing price down, and you could follow that game, and you could trade that. Just as we see it here, it started stepping up and stepping up and stepping up and stepping up. And so you can trade that. If you can identify these moves, if you can see it in the order book, then you can trade it. Now, most recently, you can see we had some decent liquidity here in the 55, 56K level. And of course, we do have a local low down here at 56.5, right? It was here. Here's our local low, which is yet to be retested. Remember, 59 didn't hold for us. We thought 59 was going to be the thing, and 59 didn't hold. And so, and that comes from this move right here, right? We got a retest. We thought it would hold. It didn't hold. It broke through. And so is this the new level? For the moment, it is, and it's yet to be retested. So again, reasonable to think that a retest could occur at some point. Doesn't mean it has to happen today. Doesn't mean it has to happen this week or even this month. But until we see deeper concentrations of liquidity on either side, I just think we're going to continue to range here for a while, and until something breaks, right? But most recently, and this is what I find very interesting here, is the sentiment that we had here. Even I showed you this 44, 45K level. As you can see, there's no sentiment for that down here. There's nothing really noteworthy below 50K, right? Let me expand it. There's very little down here to be concerned about. So let's move back to whichever time frame I was in. So on the monthly, you can see that at the moment, even the sentiment that we had here at this 50 to 52K level is fading, right? It started moving up. So with less sentiment for this, you would concern yourself on whether this means we have a trap door here that we could fall through, or does it mean that sentiment is moving up? And it looks like at the moment, sentiment is moving up. At least, sorry about that. It just seems that sentiment for sub 60K Bitcoin is fading at the moment. Now, nothing changes sentiment like price movement. So if this were to come back down, then you'll see more liquidity coming back into place here. But at the moment, liquidity, bid blade, and that's easy for me to say, bid related sentiment, liquidity related sentiment seems to be shifting upward, at least to 60K. Now look at these voids here. See these areas of thin liquidity? Remember, I filtered it out. So there is something there, but there's not a lot there. If liquidity dampens volatility, thin liquidity amplifies it. So if price should fall through here, it can move through very quickly. If price can, to the opposite side, it can move through this gap pretty easily as well. There's not a lot there. So yeah, sure. 67, 68K is achievable. 69K is achievable. In fact, there's not as much as I was expect to see at 69K, considering the technical importance of that level. But 70K is getting fortified. So maybe that means there's that people who might be banking on trying to short 69K are going to get squeezed higher. And obviously people who shorted yesterday are getting squeezed. But I would be very careful about aping in at these levels until you get some clarity. And the weekend is not typically a time when we get clarity. Sometimes it happens. Sometimes it's when a move happens that breaks through and carries us into the next week. But oftentimes it's where gamification happens. So let's drill down into a lower time frame and see if we can get some more clues as to what is happening here as we watch this now. So at this point, we do have these bid blocks stair stepping up, which is a good sign, right? That's a sign that things could move up higher and we could get into 70 or even above. And you remember, I just showed you that measured move up to 73. So what does that look like in the current situation? Could we get to 73? Well, we're 73 on the chart. Let's see. So right here, right? And look at this. So this bit of resistance here, this 13 million in resistance, much of this has dropped down to this level, right? Not all of it, but some of it. And so if we were to clear this, then there's not a lot of friction to get up. If we clear this 68, there's not a lot of friction to 70. If we clear 70, there's not a lot of friction to 72, and so on and so forth. Now, I would be very surprised if we get back to all-time high territory, which is at the moment 73,800 or so. I would be very surprised to see that happen at the moment. There is still, even though it's not heavily concentrated, it's diffused, right? It's laddered through this range. There is still a metric ton of ask liquidity above that 70K range, and a pretty solid amount right in front of us here. That's what about 35 million at 70K. We have right above us 30, 60, 70, 80, 83 million or so, right up to the 68.5K level, right from where we are to the 68.5K level. So there's a lot overhead. There's a lot of resistance that needs to be cut through. Meanwhile, to the downside, not so much, right? 30 million down here in this 63.5 to 64 and change level, and then it's thin back down to that 60, 61 and a half range. So and then you see how this is cleared out. This is cleared out because it's moved up to here. So these are the things I'm watching, and in terms of whether you're going to play this or not, that's up to you. Knowing what the overall narrative is in terms of long-term bullishness, that's obviously a positive sign, and it's yet to be invalidated. Doesn't mean it can't happen, but at the moment, my bias, if and I try and be very unbiased here, but my long-term outlook is obviously bullish for Bitcoin. There's just so much positive news in terms of what's happening in the market. Obviously a big win in Congress this week, as well as they have repealed some SEC regulation over who could custodian Bitcoin. Like the larger traditional institutions, TradFi institutions. So all that's happened. All that's been approved at this point, and so things are shaping up well for Bitcoin in terms of the longer term view. It just doesn't mean that we can't have any volatility or any more downside between now and new all-time highs. And I do think that we will. I do think that it's reasonable to expect a retest down to these levels. And whether that retest materializes as a trip to the moving averages, or whether it goes to this prior consolidation range, remains to be seen. At the moment, there just doesn't seem to be a lot of sentiment to go below this 60K level. So I would be surprised if we get this test down here to the 56.5, like I would really, really like to see. So you don't get them right all the time. I certainly don't. I try to get them right more. I get them right more than I get them wrong, and so that's always a positive. That's how you play the game. But and anybody who says they get it right all the time is not telling you the truth. But yes, I was surprised that we didn't get this retest down here, but we know why it didn't happen, and it didn't happen because of this block of liquidity that moved into place yesterday that stopped it and then spoofed. So they spoofed because price did what they wanted it to do. And now my expectation is they might pump through the weekend. I think we could see some of this range round tripped, Whether we make it back down this low or not remains to be seen, but do not be surprised if they get to these resistance levels and then they start pushing things down. So I'll be watching again what purple whales are doing, especially. Yes, brown whales will also be in the mix, but uh, purple seems to be the smart money, in my opinion. So that's what I'm watching the closest here throughout the weekend and, quite frankly, every day. So as you can see, they've been buying dips and selling rips, and I think that is going to continue. At the moment, we do have some support here at 66K. We have resistance strengthening at 68K, and these whales are basically trying to sucker in some more late longs, and this is what you have to be cautious about, right? Um, if you're doing it for the long haul, then maybe you're going to be okay. If you're looking for a swing trade, you got to be really, really careful, because it looks like at the moment that resistance is strengthening here at 68K, and that could potentially be a ceiling. It could also spoof, right? So I'll look to see if we get another stair step up, pushing it up into the 68, and if things continue to rise from that, because whales have sold a little bit, but they're still net rather positive on the time frame. Let's take a look at the absolute CVD and see what they've done for the day. Past 24 hours, 45 million, 46 million out of those purple whales. Meanwhile, brown mega whales only 6.5 million. So that's kind of what I'm talking about here in terms of what the order classes are doing. Don't be fooled by the size of brown mega whales, because they're just not doing the frequency or volume that the smaller whales are doing here. And the killer whales are the ones that seem to be dominating the game at this point. Hope that helps you out and gives you some insight as you head into the weekend. If you like the content, please do me a favor and smash all the buttons. Give me a like, share the content, please, especially. That certainly helps me the most. And so do the comments. Keep the comments coming. I appreciate each and every one of them. Wakas, thanks for, I hope I pronounced your name okay, but thanks for joining me. I appreciate the follow and the support, as I do with each and every one of you. I've been asked a couple of times to make sure that I'm adding these written analysis to these live streams, and I do so. It's already on the YouTube version. I'll add to that a little bit, since we've covered a few more things than I initially expected, and I will copy those into the X feeds as well. So with that, how much is fire charts? That's a good question, Jonathan. If you go over to materialindicators.com, you can get all of actually, in the description, there's a link that will get you there. So you can click on that link. I'll have it down in the description. You can click on that link, and that will get you to fire charts, especially if you're on you're doing it on the YouTube version. That link is there already. I will add it into the X feeds here in a little bit. There's a couple different versions of fire charts, though, that you should know about. One is fire charts 1.0, and one is fire charts 2.0 beta. And the one that I'm showing you is 2.0 beta. And the benefit of this one, here's the biggest difference, is, well, there's a couple of differences that are rather important. The biggest difference is that fire charts 1.0 only shows you 1 day of order book history, meaning you only get this heat map 1 day history. You get price and CVD data for up to 3 years, but you only get the order book for 1 day. On fire charts 2.0 data, you get 3 years of order book data. You get near real-time price and CVD movement, and you get more frequent. Not only do you get more frequent updates on the chart, both of them, by the way, have support all Bitcoin and USDT pairs on Binance. And but Fire Charts 2 comes with a whole lot more. Fire Charts 2 is part of a Premium Plus package. It includes our indicators, the MTF mean reversion indicator, which I have shown you guys here before. It's pretty freaking spot on. Let's see, what was the last move? This is great for buying dips, by the way, right? If whether you want to use this for a scalping strategy, short time frames, 1 minute candles, this is great for buying dips, and or you can use it for longer term accumulation strategies where you're buying buying bigger dips. This is a mean reversion indicator, and I've got tutorials on this one as well. If you guys want, one day I'll give you another run through this. Let me see if I can find that order again. Here we go. Where did this one buy? Oh, I ran out of that's the problem with TradingView, right? It only gives me a limited history. So this one fell out of the range. Let me go to the 3-minute chart so we can see it. And it will still be in that history here. So this was a last signal came in. This is a 3% deviation that came in at the beginning of the month at 56.5. That was the dip literally to the bottom. And yes, I bought it. Thank you very much. This is where things are at right now, right? So it comes with this, and it also comes with our trend precognition indicator on TradingView. Oop, I just made it disappear. Trend precognition comes with a couple different algos. It's also a really good one. Look at this. It's called for that short on Doge. Doge dumped, and now Doge is recovering and running into resistance in expected places. So it comes with both of these indicators. This is a premium plus package, by the way, and it comes with literally dozens of other metrics. I'm not sure if I'm signed into the dashboard, but let me see real quick. Give me a second. Let me hide that, and we'll go log back into that for you. You know what? I'll do that on another deal, because that's like a whole nother thing. It's going to take me a lot more time. But yeah, there's dozens of other metrics in the dashboard. So you get that, and you get our free membership in our private Telegram community, and you get priority service right here from yours truly. So if you're interested in that, you want a premium plus package. Mike Robb is asking, can you do the half-hour notification before going live? I don't know how other channels do it, but the alert before you go live would help. Cheers. I can try and get to something like that, but I'll be honest with you, Mike. I never know when I'm going to be able to pull this thing off, because I'm juggling. My life is a juggling act. I'm a work from home dad. I got a lot of stuff going on, running a couple businesses and trying to get these live streams out. But I can try and do a better job of notifying you guys when the lives are going to happen. But know that you can always catch the replays on YouTube, and now you can catch them on X as well. Hey, Twitter actually got rebranded as X. Finally, he got the URL. I dying to know what he had to pay for that. It was millions of dollars. All right. Well, with that, guys, I appreciate you guys following. Sorry we were a little all over the place today, but I hope you learned something. And I hope that we can navigate through this weekend together and all end up in with green P&L. With that, I'm going to wrap it, and we'll keep an eye on things. I'll do my best to give you some updates here this weekend. But guess what, guys? Tomorrow morning, I'm going fishing. I need to take a break for myself and back away from screens and go get my string stretched. And my kid, senior prom tomorrow night. So I got that action going on too, man. A lot going on in my life, but really happy with what's going on in my world, and really happy to have you guys following me along. I really, truly do appreciate the support. So with that, we're going to give it a wrap and wish you guys a fantastic weekend. And as always, trade safe, my friends.